Can candlestick patterns predict your future? Let's find out. Candlestick patterns are a powerful tool in the world of investing and trading. Dating back to the 18th century Japan, they were originally used for tracking rice prices. For beginners, understanding candlestick patterns starts with recognizing the visual elements. Each candle represents a specific time frame, with a body indicating the opening and closing prices. The wick or shadow extends from the body, showing the price range. A green candle means the price is higher, while a red candle signifies a lower close. A doji suggests a market indecision, while a hammer often signals a potential reversal. Investing wisely is an art, and understanding candlestick pattern is your opportunity to better your art. And speaking of opportunities, your pathway to learning with real-time data and analytics is Strike. Register for free on web.strike.money and make informed decisions.